Hooty hoo, all my stock market gamblers. Welcome today. It's Friday. Made it to the end of the week. What a week it was. Another bull week. The market's taking off still. Big update today. Dow's up about 300. Nasdaq's up about 200. So how do I see this playing out? Well, with incredible run. You can't deny it. Bulls are still in charge. And what we got that CPI number this week, and it was taken as good news that we're only have inflation at 8.5%. And then the market gapped up higher. And then the PPI number came out yesterday, and then the market gapped up higher. But in a long run up, I call these exhaustion gaps. These are the end gaps. And it's pushing it right into the 200-day moving average. The SPY is sitting right below the 200-day. Now, if you look at the Russell, the small caps, that's already at the 200-day, sitting right on top of that. So we got this new tug-of-war going between the bulls and the bears at the 200-day. Can they push it higher? Now, if you notice on the SPY on the weekly, that's come up to the 50-week moving average, where it will hit resistance there again and get the tug-of-war between the bulls and the bears. Right now, the bulls are clearly winning, and they may cut through both of these resistance levels easily. This is what I call a short covering rally. A lot of people are still shooting against the market, saying that this will fail. And at some point it will, but the question is where? Will it get through these next two resistance levels? We'll see how that all plays out. Let's move over to the real estate market. Now, real estate, in full disclosure, well, I am a real estate broker, and back in January, most people that were brokers, that were agents, they looked at the market and they thought it was doing great. It was moving along smoothly. Everything was going good. But you get from January, you get out till June, it was a little different. It's like, oh crap, what happened to the market? Well, here's what happened. They raised the interest rates, right? Mortgage rates were 2.8%, and now they're 5.5%. So this has slowed the market down to a grind. Real estate agents and also mortgage brokers, most of them work on commission only, right? You eat what you kill. You sell something, you get paid. Okay, well, these agents, they're working they're working twice as hard, right? They're doing twice the workload because it's actually slowed down, and they're making half the money. So they're doing twice the workload and making half the money. Why did I say twice the workload? Well, it's harder to get things sold now, right? Before, when they put it on, it would just sell. They didn't have to do anything. But now maybe it sells, and then it falls out of escrow, and then they have to sell it again, and maybe it falls out twice. A lot of things are falling out of escrow. So it's a lot more work for the agents. The loans, loan brokers, same situation. They put the mortgage in place, and then it falls out, and they never get paid. They did the work, they didn't get paid because it fell out of escrow. So they're working twice as hard, making half the money, and that's what's happening if you're in that industry. Now, some places like Redfin and some of the mortgage companies, their agents are not on commission. They actually pay them. And so there's been these layoffs now. So these layoffs have started to happen, where the layoffs are happening and people are getting fired and they have to go find new work. All right, so why do I say that the housing market has hit what I call reverse FOMO? Before, there was the fear of missing out, right? There was a fear that if you didn't buy now, you're never going to be able to afford a house and you're just going to miss out. Well, that has changed now. That has changed. It's now like there's a fear of getting your head chopped off if you buy a house. Look at the inventory is spiking upward. No one can deny that. We got 130,000 new listings that additional listing that just came on in the month of July. Okay, that is inventory spiking up. And now we thought that because inventory would spike up, that all the buyers would come rushing back. But the problem problem is the buyers, they can't really afford to buy anymore because rates went from 2.8 to 5.5%. So the buyers, they can't afford these houses. Look, if you're a middle class family, you're probably not going to be able to afford to buy a house. To tell you the truth, you can barely afford to rent a house in this market. Look at, for the first time ever, the average rent price in the United States has jumped above $2,000. Now, what's the average wage in the United States? I'm not sure what it is. Probably somewhere around $50,000, right? So let's call it $50,000. So, okay, so the average wage is $50,000. Let's call that roughly $4,000 a month. Well, half of that money's going to rent. Half of your money going to rent right now. And that's before the taxes take out the other part. Okay, so you don't have much left to eat, to put gas in your car. You just don't have that much left. It's changed now, right? So they can't afford to rent a house, let alone afford to buy a house. So where are the buyers going to be coming from? Well, that's the problem. The buyers aren't coming. They kind of went on strike. They have the reverse FOMO, as I call it. They don't want to get into this marketplace because they know 6 months to a year from now, they can get their house at a much better deal. Why buy now? Why not sit back and just wait? I agree with that. They should sit back and just wait. Look at new home construction. New home construction, there's a record number of homes being built right now, right? 1.5 million are coming onto the marketplace. And while they're not allowed to get, well, they're allowed to get them sold, they just can't get them sold right now. Okay, so they can't get them sold. And even when they do sell them, they get it under contract. 15 to 20% of those people are backing out of the contracts, and they're saying, no, we cannot afford to buy at these high prices with interest rates so high. Interest rates are too high. So a lot of people are backing out. So what are the new home sales doing? Well, they've already dropped their rate 10%. Now, of course, new homes in your area, they haven't dropped the rates. But overall, throughout the U.S., on average, new homes are selling at a 10% reduced rate already. And many areas have already started to drop. They've started to drop by 5, 10%, some 15%, some 20%. Boise's, that's the canary in the coal mine. I keep bringing that up. Boise is just, it's just dropping like a rock. There's so many listings out there. Do you realize right now, 50% of the listings that are out there have been on the market for more than 30 days. 50% of the listings have been on the market for more than 30 days. This hasn't happened for 20 years. This might give you an indication of what's coming down the road. This is not over by any means. Things take time to play out. Look, this is going to take 18 months, 24 months to play out. The crash in real estate, it's not like a stock market crash. And I do think we will get a stock market crash where it can go down 50% overnight. You could wake up tomorrow and the market could be down 50%. Real estate's not like that. It takes time. It takes time to play out. And it is playing out. It's playing out right now. And you can just tell by just these leading indicators. For example, okay, like the Google search for sell my house, right? It is at a record. It's never been this high. People want to sell their house. The Google search for buy a house, that's not at a record. No, these are leading indicators that people want to get out of this market. This market has changed and they want to get out of it. They see the writing on the wall. You got these people, all right, let's talk about the ones that have these investment properties, let's call them, or they rent them out on Airbnb. Look at that. Things are getting a little weird there. There's a lot of vacancy rates now. They're not getting the prices that they thought they could get, and they're not filling up like they thought they could get. So a lot of people are thinking, hey, maybe it's time to sell right now. Maybe it's time to get out of the market. It's close to a high. Now, granted, it's not as high as Billy Bob sold at, because Billy Bob hit the top. He got out at the very high, but it can still get out pretty close to the high. So a lot of people are starting to run for the exits. They want out. They want out now. And they're doing the searches. They're doing the search for sell my home. Look at, once again, 50% of all listings have been on the market already 30 days or longer. Hasn't happened in 20 years. Leading indicator. Inventory's going like this. And foreclosures haven't even really started yet. Now, Pete, you go, Mike, there's not going to be any foreclosures. Everybody's got all this equity. They do now, but as prices start to come down, that equity goes away. And once they get underwater, the foreclosures, they just pile on. I'm telling you, inventory's coming. Foreclosures are coming. The new home sales market's coming. The investors want out. They're running for the exits. Everything's starting to change. Back in January, real estate agents, mortgage brokers, they were all happy, singing happy songs. Now it's changed. They're going, oh crap, that's the new song. Oh crap, I don't know. It has changed. They're working twice as hard, making half the money because things are not running smoothly. Things are broken. They're trying to piece together the deal the best they can. And they're trying to hold the deals together because people, once they get in, they want out. They realize they made a mistake. And if you're in right now, you might want to get out. I don't know. Look at right now, people are starting to have remorse that they bought in the last year. People that bought in the last year, they're having buyer's remorse. People that are entering into contracts right now, they want to get out of the contract. I know you can go to real estate agents and they'll tell you the market's great time to buy. Dave Ramsey, never been a better time. Barbara Cochran, best market she's ever seen. Look at, you can take their advice or you can sit back and watch the show. It really doesn't matter, but you got to understand that the markets change. People are going to get hurt that are buying right now. If you buy something right now, please, just make sure you want to stay there at least 10 years because that's how long it's going to take to get back to these levels. It's going to take at least 10 years to get back to the price Billy Bob got at. And that's if it ever comes back. Maybe it just, we move down and we plateau and we don't come back. It's possible, right? Well, not in your area, but it's possible. If you like this stuff, give me the thumbs up. Why not? It's Friday. Give me 2 thumbs up. I'm Tall Mike. Get out there. Have a great weekend, everybody, and we'll talk again real soon. Bye-bye now.